Despite the paper price smashes in paper, gold, and silver prices in US dollars, and how gold stocks and gold mining stocks have gotten smashed to try to dissuade the public from owning these shares, despite how profit margins for many of these companies are still very solid, the stories that have come out in the last couple days about physical gold demand. I've been covering gold and silver markets for over a decade, as many of you know, and I've never seen stories like this in terms of tonnage purchases by central banks, in terms of a large technology company, Peter Thiel's big data cybersecurity company that caters to a lot of Fortune 500 companies and also the US government and US military, is now accepting payments in gold. And they also, with their cash reserves, this is Palantir, they also just bought $51 million worth of physical gold, it was disclosed. So you have enormous central bank purchases, whether that's from Brazil. They've just increased their gold reserves massively in just the last couple months, up nearly 100% increase. Central banks are buying physical gold at an enormous pace so far in 2021. I've been covering this since the year started. We are seeing a big increase starting in January of 2021 with central bank net purchases and also private demand for physical gold coming back in China, India, and Asia. That was not there in 2020. And the paper gold prices being smashed. In a lot of cases, and I've been around the gold market for a very long time now, over a decade, when there is large physical demand orders, especially enormous tonnage orders, the paper price is often smashed to help fill these orders. Because the bullion banks and others who are helping fill these orders don't care if the price gets smashed. They need the metal to fill the orders for their customers. And the customers who are buying this tonnage, especially central banks, they don't care if the paper price of gold is smashed $50 or $100 or even a little bit more than that, because they're thinking longer term. They're thinking about getting hedges outside of the dollar, outside of the fiat currency system, moving more and more of their reserves out of dollars and out of fiat currencies. And they care about actually getting the metal. That's what these central banks care about. They want the metal. So they don't care if the paper price is smashed $50, $100, maybe even $150 or $200, as long as they get the metal, because they know that in the next couple of years, the gold price is going to go substantially higher. There is not a lot of new gold mines that are going to be coming online at current prices. I was just having a conversation with another gold company CEO. We're going to be looking at $2,000 an ounce gold, at least, before new mines come online. There's going to be a lot higher cost pressure. The cost to build new mines is going to go up a lot. With commodity prices higher and labor costs in other countries, the cost to build a new mine is going to be substantially higher than it was 12, 18, 24 months ago. So at the current gold prices, there's not going to be a lot of new gold mines that are coming online. You can see this with a lot of gold mining companies. They are not investing in new mines. They're investing in upgrading their mills and investing in existing property, plant, and equipment. So they're not investing in building new mines. The majority of the gold mining industry, they're investing in their existing mines to either maintain profit margins or lower costs or grow reserves at existing mines. That is what the majority of the industry is doing. Also, as I've been covering in articles for patrons, you're seeing now pretty much all silver miners are buying gold mines. A lot of the economic silver mines are gone. It's sad. But over the last 5 to 7 years, pretty much the entire silver mining industry has had to buy gold mines. There were a couple silver miners that had held out, that had not bought a gold mine yet, but really in the last 6 to 8 months that has changed. And the remaining silver miners, your Fortuna Silvers, your First Majestic Silvers, your Endeavor Silvers, have all bought either a producing gold mine or a gold project to develop. And that's unfortunately the reality of the situation for silver miners. There's a few exceptions to this, but a lot of potential new silver mines are going to need at least $30 silver, maybe $35, $40 an ounce silver to be economic. That is how high cost, that is how low grade a lot of potential new silver mines in the future are. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content, research, financial education, and analysis than I provide in these short little free videos, there is 25 new articles out for patrons in the last 10 weeks, and now over 180 articles, charts, and audio podcasts exclusive for patrons. These are in-depth articles that often take me many hours, going through company investor presentations, annual reports, quarterly reports to find all-in sustaining costs or grades on a lot of interesting topics about global macro companies and sectors, gold mining, silver mining, precious metal royalty and streaming companies, the uranium, the oil industry, and many other commodities and value investing topics. I think it is one of the best deals out there. I charge less than anyone else for premium content. If you don't like it, you can always cancel, although it is a bargain. And making these YouTube videos with Google AdWords revenues, they don't pay any of my bills. So if I could wrap up this short little video in only a minute, I will say that we are seeing long-term, very, very bullish news stories for gold. Yes, the paper price is getting smashed. Yes, gold stocks are being smashed too. But these underlying businesses, most of them, except for Barrick Gold, are still doing very, very well on a historical basis, especially compared to how the gold mining industry has historically behaved. So for now, gold miners overall are doing very, very well. And we're seeing a lot of bullish news stories about central bank purchases, huge increases in tonnage. And we saw the first large corporation that is basically a technology company, a big data cybersecurity firm that caters to large corporations and the US government and the US military, Palantir. That's Peter Thiel's company, billionaire investor Peter Thiel's company. They are the first large corporation, to my knowledge, that is now accepting payments in physical gold, maybe through gold money or some other source. And they also just put $51 million of their cash reserves into physical gold purchases. So maybe this will start a trend. Although Peter Thiel is considered more of a contrarian investor and contrarian thinker, I actually met him in person years ago at a libertarian conference. He's a really smart guy. I don't agree with everything he says or does, but this is very interesting what he decided to do with his company, Palantir, and buck the trend and put a good chunk of their cash reserves into physical gold. And now Palantir is actually accepting physical gold as payment as well, unlike a lot of other large corporations that are starting to take Bitcoin. So a lot of central banks are continuing to buy enormous purchases of physical gold in tonnage. These are often governments and central banks that have not bought gold in 1 or 2 decades, sometimes longer than that. So the largest purchasers so far in 2021 of physical gold have been governments like Brazil, India, Hungary, Thailand, and Russia, compared to China and some of the other governments in the past.